Hi, I'm Aneesha from IIM Trichy and this is my IP video submission. I have chosen the topic the Indian banking sector, its challenges and opportunities. Let's look at the current scenario. The RBI, the Reserve Bank of India, is the highest banking regulatory authority in India. It was established by the RBI Act 1934. Now, Indian banks are basically divided into two groups, scheduled and non-scheduled banks. The scheduled banks are those which are included in the second schedule of the RBI Act 1934. Now, on the basis of ownership, commercial banks are further divided into private and public sector banks. In India, the number of public sector banks were 27, but as of August 2019, the Government of India had announced a merger of 10 public sector banks into 4 bigger and stronger banks, which led the number of public sector banks down to 12, which includes 6 merged and 6 independent public sector banks. The number of private sector banks in India is 22. Let's look at the challenges. One of the biggest risks to India's banks is the rise in bad loans. The slowdown in the economy in the last few years led to a rise in the bad loans, which is not the non-performing assets. These are loans which are not repaid back by the borrower. Thus, it is a major loss for the bank. Next is the maintaining capital adequacy ratio. One way that a bank tries to ensure that it is protected from bad loans is by setting aside money as a provision. Now, this money cannot be used for any other purposes, including lending. As a result, banks have lower capital available for its various other operations. Now, the capital adequacy ratio measures how much capital that a bank has. Now, when this falls, the bank has to borrow money or use depositors' money to lend, which is riskier and costlier than the bank's own capital. Thus, it is important to maintain the capital adequacy ratio. Next is changes in management. Now, public sector banks are seeing more and more employees retire these days. So, younger employees are replacing the elder, more experienced employees. This happens at junior levels though. So, as a result, there would be a vacuum in the middle and senior level. Now, the absence of middle management could have an adverse impact on the bank's decision making process because this particular segment of officers had played a critical role in translating the top management strategy into workable action plans. Another challenge is the technological advances. It is very important for banks to keep up with the trends in uh, the banking sector like digitalization and mobile banking. With the rapid growth of such technology, it is necessary for the banking and financial industry to adopt these trends for the benefit of their customers and also to stay competitive. Now, enhanced mobile banking is one of the major trends in banking system. The use of a smartphone to provide various banking procedures such as checking account balance, fund transfer, and bill payments without the need of visiting a branch is a very beneficial trend for the customer, and it has completely changed the traditional banking system. The next problem is inadequate banking infrastructure. This happens mainly in at the bottom of the pyramid, which is the rural market. The banking sector does not have the infrastructure to reach out to the rural market because 69% of India's population resides in rural areas, but the government does not provide enough access to bank accounts to all the households of the country, especially in the rural areas. But if everyone gets access to a bank account, the many villages do not have adequate branches or ATMs to access these accounts. Thus, there is a need for better supervision and monitoring framework. Let's move on to opportunities. Now, one of the most important opportunity that is waiting to be exploited is digital banking in rural areas. Now, as I've said, people are not really equipped with the latest technology in rural areas, but this is the opportunity for innovations. The dominant logic of banks that the rural population does not want to be equipped with the technology must be kept aside, and they have to come up with innovative ways to use these opportunities. Next is blockchain. Now, with the overwhelming popularity of cryptocurrencies, many banks and financial organizations have accepted the potential of blockchain technology. Blockchain has various uses, such as safety in storing and transmitting data. It eases the KYC process. It has an open and transparent system, and it is It has a secure infrastructure and also lowers the operating cost. Another opportunity is peer to peer lending. Peer to peer lending is a method of debt financing that enables individuals to borrow and lend money without using an official financial institution as an intermediary. According to the RBI, the situation for this market is optimistic. Now, finally, artificial intelligence and big data. AI is a fast evolving and go to technology for companies across the world for personalizing experiences. Most common uses of AI is fraud detection, risk management, digitization and automation, wealth management, and image or face recognition enabled ATMs. The fundamental applications include bringing smarter chatbots, which are currently used by HDFC Bank, SBI Bank, ICICI, and Axis Bank, and also providing personalized services for individuals and placing AI robot for self-service at banks.